So thank you again. I think we're progressing great. Really looking forward to going to our third panel. This time I'd like to welcome our third panel to the stage, and our 2019 Director, Mike Montague, as our moderator to get us started. And this is actually Mike Montague. That was George Nagel, just in case you were.
Just be sure you spell my name correctly, George, on those commission checks. And thank you, Robin. Thank you. It's a great turnout here today. This is great. An exciting day. The panel now is going to talk about investing in second suites, specifically the fine print and financing and managing of second suites. So I'd like to welcome to the panel here At.Shaloo Stolte from Mortgage Sense, At.Shari Elliott from Elliott and Elliott, Barristers and Solicitors, and Jerry Hay, Realtor with BDAR and past president of the Barrie District Association of Realtors. And presenting first will be At.Shaloo on financing of second suites.
Good morning, everybody. All right, I'm going to talk about the financing of second suites. So in determining the correct financing for your project, we have to ask some important questions. One, has the borrower met with a qualified mortgage broker or banker who understands how second suites work and has given them a plan, including title planning? 2, is the property registered as a legal second suite? 3, will a portion of the property be owner-occupied or will it be entirely rented? 4, how much of the rent will be needed to make it work? And 5, have we covered the basics? Now, when it comes to the plan, again, we want to make sure the buyer meets with a mortgage broker or banker. We need to know if this is the first property that they're buying. Do they own any more homes on their own or with somebody else? What's the down payment? This will determine if it can be a legal second suite or non-legal. Identify municipal second suite regulations, and will the property be managed for them or are they ready to become a landlord? Now let's recap on the definition of legal second suite. Second suites are second dwelling units located on one property, typically in the basement, found in the basement a single dwelling unit. A second unit can also be located in a detached garage that's been converted into a dwelling unit. When it comes to the financing details, is the property owner-occupied or rental? For legal second suites and owner-occupied, financing is done through the big banks or monoline lenders, typically like a big bank. The down payment can be as little as 5% for an owner-occupied property, which also includes the CMHC premium, or it can be as little as 20% down if you want to avoid the premium cost. If it's a non-legal second suite or non-owner occupied, non-legal second suites are financed through an alternative lender. The down payment requirements as little as 20% if one of the units is owner occupied, or 25% if it's fully rented. In certain circumstances, the down payment can increase depending on the type of property itself. So is there well and septic? Is it rural, out of the city? Additional fees apply with alternative lenders. Mortgage rates will be a little higher. There'll be a lender fee, a broker fee. These fees typically can be written off. Consult your accountant for the proper tax advice. And fees are typically irrelevant, we like to say in our industry, as long as it makes sense and the numbers work, then it's a great investment. There is limited financing options for second suites. If you look at the big pie and what's available, there's a small portion of non-legal second suites that actually get financed. The bigger picture is the legal second suites. That's where you want to focus to get your conversions done. For non-legal second suites, they're harder to finance. Again, it's location, well and septic, larger down payment, additional cost to finance. Is it owner occupied in a rental or just a rental unit? If you're looking at non-conforming second suite requirements, they typically don't meet the safety standards such as egress. They'll need to be financed on the alternative side. You may be able to finance with a credit union. The zoning typically doesn't allow for them, but they were built with an exception. You need to have a separate entrance, a kitchen with a range, and a bathroom. If the property is grandfathered in, it has a second suite prior to January 14th, 1994. It's considered to be grandfathered in, which means the bank will allow for the rental income to be used to offset it. An affidavit will be signed by someone to state that had a rental component in prior to this date. Keep in mind the property is grandfathered in. Again, it doesn't meet safety code, so you want to work with the city to meet their safety guidelines. I had a property and I actually worked with getting it legalized, and it was grandfathered in, so I've gone through the process. Now, if you purchase under the Purchase Plus Improvements, it gives the option to add a legal second suite to a home right after it's purchased, as long as one of the units is owner occupied. This is an insured product, so CMHC. The additional unit will have to be legal, borrowers will have to meet the requirements of an A lender, and the insured fees will apply. Renovations need to be done in 30 to 60 days, and their appraisal has to be ordered and completed. Receipts and paid invoices are submitted to the lender, who will add them back to the purchase price of the mortgage. This will save you time from going through the refinance process in such a short period of time. Most lenders won't approve a property to be refinanced if it hasn't been held for a year and if it's not recorded on your taxes. With the rental offset, we need to know how much money do you need to make the numbers work. So typical lenders on the A side, they allow for 50% rental offset, possibly 100. You could DCR some of the properties, provided that it's been claimed on taxes for 1 full year. For B lenders, your alternative lenders, you typically allow for 80 to 100% rental offset for the subject property. Things to remember, the more properties you own, the greater the rental offset will be needed. If you buy different investment properties with other people, you'll get half the rent and all the carrying costs. So you should do some title planning if you plan on expanding your portfolio. Now, when we're covering the basics, when it comes to an A lender, the borrower's profile, we want to see credit scores of 680 or higher, good or great credit history, good stable income, steady income, debts are at a minimum, 2 active trade lines. On the B side, the borrower's profile looks like a credit score of 600 or higher. The higher the better. They can have some credit issues. They may be working on reestablishing credit. Income may need to be grouped a little differently. Debts may be a little bit higher. So now putting it all together, I have a happy couple, Sarah and Steve. I'm sure you've all met someone like this before. They're looking to buy their first home. Sarah's a dental hygienist. She's been working 2 years full-time. She makes $40,000 in income. She carries $10,000 in student debt, savings of $5,000. Her credit score is just over 720. Steve, he's a manager. He's been employed 3 years full-time. Annual salary, $60,000. He carries about $7,000 in total debt on 2 credit cards. He makes this payment every month, at least the minimum, sometimes a little more. He has a car loan, $350 a month. Savings of $20,000. His credit score is just over 750. The property they're looking at is a property in Barrie. It's a semi-detached house with a legal basement second suite. It's located again in Barrie. Purchase price $450,000. Taxes $3,100. Down payment at 5%, $22,500. Estimated closing costs $6,750. Of course, that will be adjusted at the lawyer's office for the first-time home buyer incentive. Now, on the mortgage side, when we're running the numbers, we're looking at the GDS and TDS. GDS is your gross debt service ratio. It measures your income in relation to all your housing costs or your principal, interest, taxes, and heat. For an A lender, the maximum GDS is 39% for a credit score of 680 or higher. TDS is your total debt service. It measures your income in relation to your housing costs and all other debt obligations, such as your credit cards, student loans, car payments. For an A lender, that TDS maximum is 44%. Now, when we're running the numbers, putting it all together, in this scenario, the GDS for this couple is 35%. TDS is at 46%, so that means that they actually don't qualify to buy the house on its own. But because of that legal second suite, the rental income in the basement is $1,000. So the A lender will typically allow 50% of rental income to be used for the qualification process. That puts all the ratios in line. So now we're at 33 on GDS, and TDS falls in line at 43%. Sarah and Steve, now they're happy and they're able to buy their home, and you guys can close your deal. Now, when it comes to the rate of approval, the success of buying second suite increases when we get to meet with the client first. We get to do details up front, have the conversations with them. There's so many variables that are involved in the second suite. So again, it's recommended, get them to see the mortgage broker or banker before they buy. Important things to keep in mind, we need 5 business days for financing, the location of the property, services that are offered, is it well and septic, Some of the factors, some of these factors may increase the down payment piece. If it's not a legal second suite, it'll take time and money to go through the legalization process. So I leave you with this one final thought. Understanding the mortgage process is like trying to understand why pizza is made round to be put in a square box and eaten in triangles.
Thank you, Shaloo. And now Sherry Elliott will talk to us about legal considerations with second suite ownership.
Great, thank you. I'm glad you said that because I'm not talking about financing or managing. I'm talking about what I see in my office. So first of all, when I'm dealing with second suites and apartments, it has to do with when the agreements usually come to me and it's already firm from the agents. So I'm talking about it from my point of view and from the advice I give to my realtors. So first of all, the most important thing when you have someone with a second suite or anything that is rented out, that you rely on your client to give you all the information beforehand and you fully disclose it in the listing so that everybody knows what they're purchasing. The difference between legal and illegal is going to impact the payment that's going to be made, the value that that has to the property. Covering your client and covering yourself is the most important thing that you can do as a realtor. So don't try to deceive on behalf of your client. It doesn't help anybody. So make sure you're getting all the information from your client. If it is illegal, make sure you're listing that. I actually just spoke to one of the principals at Stewart Title this morning, right before the presentation. Stewart Title is the title insurance company that I use for my clients. And just asked him, and I spoke to an insurance broker too, and I just wanted to relay this. When I have something that is an illegal suite, I disclose that to the title insurance company. I make sure the client is aware as well. They won't have any coverage, but then it will be clear if anything happens. They're not coming back on me or the realtor or the previous owner expecting it to have been legal and for them to have coverage. So what I do in my office, and I suggest every realtor does, is I get them to acknowledge that they have agreed to close with an illegal suite and they understand the issues with that, including insurance ramifications. So then I spoke to a broker this morning too, because the insurance is the most important thing from my point of view. And he said the same thing, never lie to your insurer. Make sure that you tell them if there is a second suite. It will cost you more for insurance and your coverage will just be an acknowledgement that they know you have an illegal suite. You won't get a rebuild of an illegal suite or any coverage for that from your insurance. And something I wanted to point out, it was referred to me 3 times this week by clients and others. If you Google the name, what was her name? Alicia Lammers, which is ALISHA LAMERS. You'll come up with the case in Toronto where it was a rooming house. Same situation with the second suite though. There was not proper egress for her to get out and she died. The owner personally is having to pay $1.3 million because of the, even if he had disclosed that it was illegal, you're not going to be covered from being negligent, from not following the building code. So that's why I always cover myself and you should cover yourself with your clients. Yes? Yes, it's Alicia. So let me pull it up so I'm saying it right. ALISHA, Alicia Lammers, LAMERS. There was a LAMERS. Okay. There was a lawsuit for $5 million and it was 1.3. It was just reported in the CBC on November 6th. Okay. So, and I think that's bringing it home to a lot of people. I think it's important that that case happened. It's very important that you as realtors understand that there is no way to protect someone with an illegal suite from everything, but you have to be honest to everybody. So as far as understanding the basics about being a landlord and tenant, because I was asked, I have brought with me, I expected more than 3 people, I brought 30. But I will leave them maybe out where the coffee is. honestly, these things don't come to me until they're raised as well. There is a new lease that everybody has to enter into. A lot of people don't know that, so it's important to have this. The other most important thing for me as a lawyer is for you as realtors to understand the process when someone's supposed to be giving vacant possession. It's not attaching an N11 to the agreement of purchase and sale, which I get, which just says they agreed to leave. And then if you read it, it says you can then, owner, take this to start the eviction process. If you go online right now, they're saying an average eviction is 105 days to get through the process. And then if there's appeal, like there's a case in Toronto right now that someone's appealing, there's like no way to get the guy out. It's been going on for 8 months. So don't expect to be able to give somebody notice and they'll leave. Because of that, everybody likes when I have clauses. I brought a clause that I use. It's kind of a reverse clause to the seller, okay? So the seller's telling you that they're going to have the person out, so make the closing 2 months from now. A lot of agents believe in that, and they've already got this N11, so they're pretty comfortable with that. Often I'm not even told there's a tenant involved. It just happened a week ago. There was nothing. It didn't even say tenant's belongings excluded. There was nothing to let me know there was a tenant until 2 days before closing and the tenant wasn't out. So if I do know, this is a clause that I have them put in if I know before, well, it's conditional or even after, which is saying the seller shall terminate the tenancy arrangements 2 weeks prior to the closing date. Once the tenant has vacated, the seller shall inform the buyer, and the buyer shall have the right to inspect the property prior to the closing to ensure the property has not been damaged. If there is damage, the seller shall be required to repair any such damage prior to the closing or provide a credit to the buyer for the cost of any such repairs. If the property is not vacant 2 weeks before closing, the closing date shall be extended for 1 more month. If after the extension, the property is not vacant 2 weeks before the closing, the buyer shall have the right to terminate this agreement or consent to a further extension on the same terms. If the buyer terminates the agreement, the deposit shall be returned without interest or deduction, and the seller shall execute a mutual release. So basically it's a reverse condition, but it allows the person to make sure that they're getting vacant possession. And it let them give time, because you never want to take on someone else's tenant, because you don't know what that's going to be. And it gives them an opportunity, if it's going to carry on too long, for them to just say, I'm gone. Okay, so I think that's extremely important, more important than anything else I would say today, is to just explain how to deal with the tenant situation and make sure everybody knows about it. I had one just a week ago, didn't know there was a tenant until the people inspected a couple of days before closing, found there was a tenant. First I know about it. The guy ended up giving her $4,000 to get out and moved her with a moving truck to a new location. She used that for rent at another location, and they helped her find. And that's the only way the deal would close. And in this situation, the buyer would not extend at all past the date. So we were like told on a Monday, it's closing on Thursday, and the tenant's got to leave. So it's important with anything to be truthful to your insurer, to your title insurance, to your lawyer. And that, I'll leave that there.
Thank you, Sherry Elliott. And our next speaker he knows the whole range with regards to second suites from the perspective both as a realtor and as a landlord himself. So I'll turn this over to Jerry Hay to give us some advice for working with our clients and advice for those who want to create that second suite themselves.
Thanks, Mike. Okay, so as a realtor, I decided to convert my basement to a second suite. So a lot of the things have been discussed prior about code and all that. So I chose to do it legal. That's the only way I wanted to do it, if I was going to do it. So I guess going from start to finish, I did my own drawings. I submitted the drawings to the city and got approval through the city and did the building permit on my own. But I hired a contractor to do the work, and I can assure you that if you're going to do this, you do need a professional contractor to do it for you. Just starting with the first inspection, a lot of things came up, and when that first inspection was over, I almost decided not to do it at all because there were some things that came up, like window size. Like I had the understanding that window size was more to do with egress, but at the end of the day, it turned out to be egress and light, natural light, right? So even though my house had good size basement windows, I had to enlarge one of the windows. So again, you talked about structural problems when you get into doing windows, and especially if you have a brick home. And so there was, the other thing was my beam down the middle of the basement was 6'4", but when you put drywall and everything on it, now it won't meet code. So all of a sudden I'm thinking, here's $20,000-$30,000 to do all this stuff to continue this. Anyway, so basically what happened was the inspectors were just wonderful. I have to disagree with George here. They were, I shouldn't say they, he was exceptional. Give us ideas, the contractor and stuff, ideas of how to rectify the beam issue and the height issue. And so consequently, because of them being so helpful, I continued doing the project, and as the inspections went along, of course there's more things came up, but most of that stuff was, I guess, not as serious in nature as the first inspection, right? The pre-construction inspection. So I have to say that the whole process from getting the building application, getting the inspections, and working with the inspector was exceptional. So I guess at the end of the day, if you've got the space available, in my case, my daughter's been long gone from the house. We haven't used the basement basically for anything other than collecting junk. So when I finally made the decision to go ahead and do the second suite, you know, and we talked about, different people have talked about this prior to me, not only is it an income stream, but it also makes the property worth more when you go to sell it. As realtors, I think we all understand that. So anyway, we got through the construction part of it, and I mean, from a realtor standpoint, I learned so much stuff, especially, you know, there was a lot of things with the building code I had no idea of, right? But my contractor, you know, was certainly aware of a lot of that. So hiring a good contractor is paramount, I think, if you're going to do it on your own. I didn't apply for a grant. I didn't want to have all the restrictions, just a personal choice. So in the end, as you can see, I think we created a pretty nice one-bedroom space. So now, in getting a tenant, as a realtor, I've leased numerous spaces over the years, but as a realtor and a homeowner, renting a space becomes a totally different feeling. So I guess from my experience, finding a good tenant, I guess I would say that be patient, the right tenant will come along, and in my case, I happened to get a very nice young couple that just got married, and so far, they've been there 3 months, everything is working out fine. But I think from a standpoint of all the building code requirements and stuff with a second suite, at the end of the day, they're all there to give your new tenant and you, if you're still occupying the unit, good enjoyment from a standpoint of noise and all that, right? And it really feels comfortable knowing that you have all the safety stuff, fire code requirements and all that in place. So my recommendation would be do it properly to start with, and if you have a space that can be converted, I think it's a very good idea to do that from the standpoint of extra income and extra value on the property when you go to sell it. Thank you.